have these relationships with multiple reinsurers. Reinsurers will cover some or all of the liability of the insurance company annuity contracts if the company should fail. Last, insurance companies contribute to their state's guarantee fund, which can be tapped to preserve the asset value of a failed insurance company up to a certain limit. Because of these safeguards and prudent corporate management, no fixed index annuity holder has failed to be fully reimbursed in the event of a company failure, which is rare. Additionally, insurance companies are rated by agencies such as AM Best for their financial condition and corporate management. In short, the fixed index annuity safely protects your principal, while legal and regulatory provisions protect the value of those assets in the unlikely event of an insurer failure. So it's really important to understand the safety that's built into these products and how they can make such a difference for you for the rest of your life. Ladies and gentlemen, you owe it to yourself to at least become educated on this option to see if it's worthwhile for you. I'm not suggesting you take every dime you have and throw it into an annuity. Not at all. I really encourage people to have a certain amount of liquidity available in case of emergencies and to have a plan. And that plan will certainly, first and foremost, look at having adequate income for the rest of your life and assuring that that income will be there no matter what, and then to look at other issues such as perhaps life insurance, estate planning, long-term care planning. These are all very, very important issues for seniors and retirees to make sure that you have the safety net that you need to have and that you won't have to become a burden on your children, which none of us want to be. But anyhow, we're up against a break, so please don't go away. We'll be right back. If you'd like to call, my number is 296-4464. That's 296-4464. Give me a call. I'd love to chat with you.
More financial strategies.
Have you had enough of the market gyrations yet? Is a double dip recession here or near? Hi, it's Glenn Beck, and I want to tell you about Susan Moore Vault at Moore Financial Strategies. If you're over 50 and you're concerned about your nest egg, you need to see Susan. She's been serving Tucson now for about 20 years, and she's never lost one dime of her clients' money. Excuse me? True. For IRA and 401k rollovers, Susan can eliminate your risk and ensure that your money is safe no matter what the market does. She can show you how to guarantee the safety and growth of your money for the rest of your life. Do your own homework with Susan and carefully decide how to manage your money. Do you want to bet on the market, or could your portfolio use some diversification to ensure some stable income no matter what happens on Wall Street? Talk to a true retirement specialist. The only one in Tucson that I've agreed to endorse is Susan Moore Vault. Call Susan now at 296-4464. That's 296-4464.
If you've missed any portion of today's show or you'd like to hear it again, simply go to www.790knst.com. Click on the On Demand tab and in the drop-down menu, select Podcasts to go to this weekend's show or Safe Money Strategies. You can also always listen to the show streaming live at 790knst.com. Thanks for listening. This is Safe Money Strategies.
More financial strategies.
Hi, we're back. At More Financial Strategies, we specialize in preserving and growing wealth without risk. The landscape for income investors is about to change. Capital gains taxes are set to increase dramatically, as are many other taxes. Are you prepared to pay these higher taxes? How do you think politicians will dig out from our exploding debt? You can beat the dividend tax increase no matter what your income bracket is. Call me and discover how. The information I have may keep you from dire financial consequences. You may lose a lot of your hard-earned money as a result of tax increases and the possible coming double-dip recession. I can help you. Let me show you alternatives. It can make all the difference in the world for you. Call me at 296-4464. That's 296-4464. This is kind of interesting. I've shared this before. It's the tale of two investors, the power of tax deferral. Please listen to this. It's just an illustration, okay? It's not an actual case. It's just an illustration. The ground rules are that we take $1 and we double it. Now you have $2. Do it 20 times and you have $1 million. But what happens when it comes time to pay taxes? Investor Bob. I have two investors, Bob and Joe. Investor Bob, he's an aggressive investor and he's decided to take one qualified dollar and double it 20 times in order to save $1 million. His strategy is to pay taxes after he has put his money to work for him and pay the taxes once on the total accrued amount. After attaining $1 million, he subjects his money to 33% taxes and is left with $702,545.92. It looks like Bob did pretty well. But what would happen if he had paid taxes along the way? Well, that's what Investor Joe did. Now listen up. Joe also has decided to double his money 20 times like Bob has, but decided that instead of paying a massive tax bill at the end of his investing, he was going to pay taxes each time after he doubled his money. After successfully doubling his dollar and paying tax on it 20 times, Joe was left with a grand total of, drumroll, $28,466.20. Can you see the difference? Wow. Tax deferral is a defining feature of annuities. The above illustration is not meant to represent the actual performance of an annuity. It's hyperbole, an exaggeration for effect. The power of the example above is that Bob was able to not only take advantage of aggressive growth, he was able to leverage that growth by earning money on the money he would have paid in taxes because he chose to defer those taxes. So when you're deferring, as opposed to paying taxes, you're earning triple compounding effectively because you're earning interest on your principal, interest on your interest, and interest on the money that you would have paid to taxes. So it's really something to give consideration to. If you have your money in the CD, what do you get? You're probably getting them right now. 1099s. Think about that. Right now, you've probably finished your taxes. You got your 1099s for the dividends that you earned and your CD interest, and you got the associated tax bill. Even if you didn't take out your interest or dividends, you still have to pay taxes on them. Did you know that even if you're getting interest on tax-free munis, municipal bonds, it will be counted as provisional income and considered for tax on your Social Security? With an annuity, your money grows tax deferred. No more 1099s until you decide to take money out. We have an annuity now that pays 2% and is completely liquid should an unexpected situation occur and you need access to your money. And there are no penalties or surrender fees. With annuities, you report nothing on your tax returns until and unless you take money out of them. Annuities can be used for IRAs or after-tax money. Call me now for more information. 296-4464. That's 296-4464. Or go to my website at www.morefs.com. And on the bar along the top, click on Annuities and open the first item in the drop-down menu, The Hidden Truth About Annuities. Think about your CD rates. I'm sure that you're not happy with them. Let me give you an example of an alternative. Say you're a 65-year-old woman and you have $100,000 sitting in a CD. You don't need the money. It's just in case money. I can show you how to lock in a guaranteed income tax-free estate value of over $190,000 for your heirs. That's a 90% immediate increase from the moment the product is issued. Here you can have safety and guarantees. If you put the money into a CD at current rates, you would need to grow your money for 43 years just to keep up. What I'm describing is a single premium life insurance policy. In addition to great returns, You have money for the just-in-case scenario. You have access to some of the liquidity. If you needed the money for long-term care and qualified by needing assistance with 2 of the 6 activities of daily living, many plans will pay out 24% of the death benefit each year for 4 years tax-free. Many companies only require a telephone interview for underwriting. So if you don't have long-term care, it's something worth looking at. If you have money that you're leaving to heirs, let me show you how to maximize it, put it on steroids, and avoid taxes, make that tax-free income. I'll show you how to leverage your money and make it work so much harder for you. But, oh my gosh, we're up against the end of another program. It goes so quickly, doesn't it? My friends, thank you for spending this time with me. I really appreciate it. And I would love your feedback. Give me a call at 296-4464. If there are any topics you would like me to share with you or any questions you would like me to answer on or off the air, let me know. 296-4464. And until next week, folks, stay safe, stay happy. God bless you. Have a wonderful weekend.
You've been listening to Safe Money Strategies with Susan Moore-Vault, president of Moore Financial Strategies. To learn more about today's program or to talk with Susan, call 520-296-4464. That's 520-296-4464. And make sure to tune in again next week at this same time for Safe Money Strategies.
Protecting all you have.